All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is August 26th, 2025. And our top story this morning is my Fed independence. What happened to my Fed independence? Well, it's gone. Not that there ever really had any, to be honest with you. But look, what's going on this morning? President Trump has used his famous catchphrase, "You're fired," this time in the direction of Federal Reserve Governor Lisa Cook. He says, "You're out of here. You committed mortgage fraud. You can't have the job anymore." Lisa Cook said, "Nuh-uh, you can't fire me." And that leaves us with where we're at today. We're probably setting up for a big fight in court. I suspect what's going to happen is that some judge from the ex-district of who gives a is probably going to come out and issue an injunction, probably by the end of the day, saying, no, the president can't fire a Federal Reserve governor. The federal government, the executive branch, is going to challenge that ruling, and it's going to end up in the Supreme Court. Now, recently, the Supreme Court ruled that the president cannot fire Federal Reserve governors, but they left this little asterisk, but they can for cause. Oh, for cause. What does that mean? What is cause? Well, the Federal Reserve didn't tell us what cause is. Is mortgage fraud cause? Probably. Is allegations of mortgage fraud cause? Probably not. In this country, you're innocent until proven guilty. So what's probably going to happen then is, I'm guessing the DOJ is going to rush to actually charge Lisa Cook with mortgage fraud, because that will strengthen the case that the charges rises to the level of cause. Oh my God, look at the armchair legal analysis going on here. By the way, I'm not a lawyer either. But guys, this is such a mess here. This is, look, the Federal Reserve already has mud in their face, whatever you want to call it. It was only 2 years ago that two Federal Reserve governors had to retire early after investigating themselves and finding no wrongdoing. Of course, for insider trading in 2020, when they all bought things like stocks, ETFs, and muni bonds right before the Federal Reserve started printing money and buying those same things, driving their value way higher and making those Federal Reserve governors a lot of money. But remember, they investigated themselves and found no wrongdoing, even though they quit right after that happened. So if we're insider trading and we're committing primary residency fraud, which honestly, I would not be the least bit surprised to learn these allegations were true. My friend Melody Wright has done an excellent job documenting how there has been so much FHA residency fraud, where people basically buy investment properties and they lie that it's going to be their primary residence so that they can get favorable interest rates from FHA-backed loans. That, of course, lying on a document to secure a mortgage is fraud. That is a felony. Are Federal Reserve governors above the law? No, they are not. But let's be honest here, guys. Are we really talking about mortgage fraud here? Or are we really talking about we're threatening this person with prosecution over something they probably did do because we want interest rates cut, because the president wants his stock bubble inflated? Let's be honest with you guys. Or let me ask you this question, all right? If President Kamala was in charge, and President Kamala was wanting to fire a hawk on the Federal Reserve Board, whether he committed mortgage fraud or not, would you be okay with that? Be honest with yourselves. Roles were reversed. The other guy is in charge. The other side is in charge. Would you be okay with it? If the answer is no, you shouldn't be okay with this. And look, there's no right answer here. There's only a bunch of wrong answers. And this is the problem when government officials commit crimes. All right. Should government officials be above the law? Nope, definitely not. Should we open the door to political prosecutions? No, we should not. That is a slippery slope, and down that road lies some Banana Republic BS. And, well, we opened that door, didn't we? With the 34 felonies and all the other silly things that we prosecuted. Oh, but he actually did this. Nobody's above the law. Again, round and around we go in circles. This sucks. And the fact is, this is the golden age of fraud. So many of these people are just, well, let's be honest with you guys. They're assholes. They're all crooks. How many assholes are on this ship? They're all assholes, sir. I knew it. I'm surrounded by assholes. So Lisa Cook probably did commit mortgage fraud. I don't know that she did for a fact, but I know millions of people likely did. And if she did commit mortgage fraud, she deserves to be fired. That's too much responsibility for somebody who would lie for financial gain. Then again, what does that mean? That means the president can just go digging around through the paper, and since they're all such corrupt a-holes, will probably find some crime, charge only the people he wants out of the job, replace them with doves who are puppets, who will ultimately lower interest rates and print money like the president wants, driving the cost of life even higher for the rest of us. There is nothing to like about this story. The Federal Reserve should not be cutting interest rates. Money supplies are at all-time highs. Asset prices are at all-time highs. The cost of living is unaffordable for the average person, and entire generations have been priced out of the housing market. We do not need to further inflate this bubble. Stop this insanity. Also going on this morning, we got Howard Lutnick, the Commerce Secretary, is out saying the U.S. government's probably going to consider taking a stake in defense contractors next. Companies like Lockheed Martin. Look, apparently we have a sovereign wealth fund in this country now. We talked about it for a while. We toyed with the idea of doing it, and I thought we kind of admitted to ourselves that it's freaking stupid to have a sovereign wealth fund when you're operating on deficits that add up to about 6.5% of GDP. Basically, we are borrowing money to buy stocks with that at the federal government level. Who had that on their 2020s bingo? That's freaking stupid. By the way, margin debt in the retail market is at an all-time high, and ETFs now outnumber stocks. What the hell is going on here? We've got President Trump is vowing to fight digital taxes against big tech companies, threatening things like export controls and tariffs if, namely, European governments don't stop doing this. It's kind of interesting to see President Trump riding to the rescue of big tech. A few years ago, big tech would have been happy to ban anybody saying anything nice about him, and now all of a sudden he seems to be fighting their fights for them. We've got the French government is on the brink of collapse for the second time in 2 years over budget deficits. At least the French are trying to cut spending. Maybe we should try. That's just an idea. I just throw them out there. You guys do what you want with them. We've got, speaking of governments and deficits, UK borrowing costs continue to grind higher. The UK 30-year gilt is at a 27-year high and still climbing. Remember, the UK had a little bit of a gilt crisis about 3 years ago when their borrowing costs exploded overnight. Well, they're now even higher than that crisis level. We've got GoPro is the latest meme stock. We've got Tilray stock is surging on the potential for MJ to be reclassified. And durable goods orders came out this morning. They were lower than they shrank, but they shrank less than expected. Aircraft was the big driver. It seems companies cutting their Boeing orders was the big takeaway here. Now, we have seen a lot of stories about countries are pledging to buy aircraft in order to get trade deals done with the president, but those pledges have yet to materialize in new orders. And so that is going to take a chunk out of GDP, probably. We got a lot to talk about this morning. How about we shrink my big melon of a head and let's see what's going on in the world of finance this morning. And look at that big black screen because Jack did not share his screen yet. I am remiss. Let's get my S&P futures up there. There we go. That looks better. By the way, guys, how about that like button and that subscribe button? All that good stuff for the algorithm. Yeah, it really helps me out. Come back tomorrow. Have your coffee with the Melonheads. We do this every day. Right now, the S&P 500, though, just barely negative. 2 points in the red, but red nonetheless, 0.03% lower. We have got the Dow is also just barely negative, 0.05% to the downside, off by about 23 points. And the NASDAQ barely negative, 0.07% lower, down about 16 points. So stocks are like pretty much unchanged here this morning. Now, check out a couple of these charts real quick. Talking about stocks, which are like hovering near all-time highs here. The Kobayashi letter put this one out yesterday. U.S. margin debt, an all-time high. It surged by $14.6 billion in July. That is a record. $1.02 trillion of money was borrowed to buy stocks. Remember, guys, if you borrow it, you got to pay it back. That's how this works, which means at some point those stocks are going to have to be sold and those loans paid back. This follows the largest monthly increase in history of $87 billion in June. Margin debt has risen by $400 billion, or 67% over the last 2 years, outpacing the market's rally. Adjusted for inflation, margin debt is now only below its October 2021 peak. You may recall the October 21 peak led to that bull or bear market of 2022, which was stopped only by the AI bubble inflating. Let's see. As a percent of GDP, margin debt has also surpassed its previous highs, including the 2000 dot-com bubble, except for 2021. Oh, I'm sure everything is fine. You know, we borrowed $1 trillion and used it to buy stocks. The government is borrowing money, using that to buy stocks and MP Materials and Intel. I'm sure everything is just fine, and this is not a what stage kind of moment. Same as this story. There are now more ETFs in the U.S. than there are individual stocks. Oh, my God, the stupidity is piling up here like that big, giant pile of Triceratops poop in Jurassic Park. The ETF boom that has democratized investing across America is reaching a tipping point. Investors and financial advisors have too many funds to choose from. Thanks to a breakneck pace of new launches, there are now more than 4,300 exchange-traded funds. A figure that for the first time eclipses the total number of stocks, currently hovering around 4,200, according to data compiled by Morningstar. ETFs account for about a quarter of the total universe of investment vehicles, up from 9% a decade ago. It's also intensifying the battle for survival among issuers. To differentiate and justify charging higher fees, firms have been launching highly risky funds, such as single stock, leveraged, and inverse ETFs that critics say amateur investors may not fully understand. And look, guys, if you're even thinking about one of these inverse or leveraged ETFs, do yourself a favor, find something similar, some fund that has been around for a long time, and zoom way out on the chart and ask yourself if that's what you want to have happen to your money. Because leveraged funds and inverse ETFs, they are by design going to lose money over time because there's constantly being time decay eating away at your money. So be careful, guys. These are investment vehicles that are designed for idiots, and there are now more of them than there are stocks to actually go in them. Again, it's a what stage kind of moment. Looking over at the DXY this morning, we've got 98.27. The dollar's weaker by about 18 basis points. That's going to put a little upward pressure on asset prices this morning. And looking over at the bond market, we've got a mixed bag once again. Long end is a little bit higher with the 30-year yield at 4.925. That's up by about 3.5 points. The 10 years at 4.282, up by not quite 1 basis point. The 2 years at 3.702, that's down by almost 3 points. And the 1 month is off by 0.5 point at 4.346. Looking over at the commodities board, we've got gold is a little bit higher this morning. Spot gold is at $33.72. That's higher by almost $7 or 0.2%. But when the news of Lisa Cook getting fired hit the tape yesterday, gold shot up about $25 in the blink of an eye, and we have since given those gains back. It's kind of interesting. The market is really disregarding this Lisa Cook story. I find that interesting. Spot silver is actually down by 15 cents or 0.4%, $38.41 for spot silver. I like the shiny. Copper, meanwhile, is down by 1/3%. Platinum is up by 1/3%. Palladium higher by about 1.25%. And WTI crude oil down by 1.5%, or about $1 lower at $63.79 for October WTI futures. And Bitcoin's pain continues this morning. We're sitting here right around 110,000. The sell-off that started with that whale dumping yesterday continued, or I should say the whale dumped 2 nights ago. It continued through the day yesterday. Now, overnight, we hit a low of 108,670. We've bounced off that low. We're currently about 110,000 here as priced on Coinbase. Look, there's a lot of talk about investors moving over to Ethereum. I'll be honest with you, Ethereum is a little bit higher, but Ethereum by a little bit higher than it was 2 weeks ago. But Ethereum has been selling off along with Bitcoin here. So this has just been whales cashing out, in my opinion. Watch this level around 100,000 here. I don't know if we're going to keep selling off, but look for support. We blew by that support from the previous high in May. That was around 111, 112 yesterday. So now I'm looking at support at the 200-day moving average, which is just below 101,000 here. Bitcoin not looking so good here. All right, let's talk about some of the other ones. We already talked a lot about the Lisa Cook story, so we're not going to elaborate any more on that. But we got this one just hit the tape right before I went live this morning. Trump Pentagon is thinking about taking equity stakes in defense contractors, says Lutnick. Trump administration's military leaders are thinking about whether the U.S. should acquire equity stakes in top defense contractors such as Lockheed Martin. Commerce Secretary Howard Lutnick said Tuesday. The cabinet secretary revealed the government's interest in taking those stakes on CNBC's Squawk Box days after the U.S. government acquired 10% of Intel stock in a roughly $9 billion deal. And remember that Intel deal, that follows the government taking a stock in MP Materials and the government taking a stock in U.S. Steel and that weird deal they cut with NVIDIA for 15% of revenue. So yeah, we kind of have ourselves a sovereign wealth fund going here, which is freaking stupid because we are borrowing money to make these investments and we're probably paying higher interest on those investments or higher interest on that debt than we're making on these investments. But there it is. Look, the government is nationalizing companies. They're nationalizing companies associated with defense. This is yet another move in the direction of shifting to a wartime economy. Again, guys, if the other people were in charge, if President Kamala was doing this, would you be okay with it? If the answer is no, then you shouldn't be okay with your guy doing it. I have mixed feelings about this. The U.S. industrial base is not sufficient to sustain us through a prolonged conflict with the Chinese. And the only way we're going to get that is if the government does things like this. But that being said, this is an inefficient allocation of capital, and we're having to borrow money and make our debt problem worse to do it. And well, in my opinion, the bigger threat to this country is our deficit spending and not China. I think that is the bigger threat to the average person in this country. Meanwhile, Trump vows export curbs and tariffs on digital tax reprisal. This one hit yesterday. U.S. President Donald Trump threatened to impose fresh tariffs and export restrictions on advanced technology and semiconductors in retaliation against other nations' digital services taxes that hit American tech companies. Trump posted on social media Monday that measures are all designed to harm or discriminate against American technology and outrageously gives a complete pass to China's largest tech companies. This must end and end now in all caps, as Trump is prone to do on Truth Social. Trump has long argued that digital service taxes discriminate against U.S. tech giants such as Amazon, Alphabet, and Meta. The U.S. has increasingly used export restrictions on technologies, including advanced chips from firms like NVIDIA, for AI it deems critical for national or economic security. The warning from the president comes a week after the U.S. and the European Union agreed in a June joint statement that they would work together to address unjustified trade barriers and would not impose customs or duties on electronic transmissions. The 27-member bloc also confirmed it wouldn't adopt network usage fees. Yet the EU reiterated separately that it had not committed to alter EU digital regulations, potentially leaving the issue untouched as leverage for future trade talks as the bloc pushes for tariff-free treatment of wine and spirits. Remember that big trade deal with the EU? Well, again, that was a tacit verbal agreement, a handshake, a not deal. And now they're actually trying to put pen to paper. A lot of these issues are still unresolved. It seems like the French want to get their wine into the U.S. without tariffs, and they're going to use digital taxes as a way to achieve that, as leverage to get it. We've made it very clear to the U.S. that changes to our digital regulations, the Digital Markets Act and the Digital Services Act, were not on the table, the EU said in a fact sheet. Earlier this summer, Canada backed down from imposing a digital tax just hours before it was due to go into effect after Trump suspended trade talks with the country over what he called an egregious tax. Other countries, including the UK, have not rolled back their 2% levy on revenue from search engines, social media services, and online marketplaces. So it looks like some of these trade deals that we advertised not quite as concrete as we thought they were. And more news in Europe this morning. French bank lead stocks lower on political uncertainty, and the CAC 40 down 1.8%. That's the French index there. So what is going on in France? French banks weighed on European markets on Tuesday as renewed political uncertainty in Paris sent the CAC 40 lower. The benchmark index fell 1.8%, with financial stocks leading the decline. Investors reacted to heightened tensions around France's 2026 budget process after Prime Minister Francois Bayrou announced he would seek a vote of confidence on September 8th in an attempt to push through a tighter fiscal plan. The move follows weeks of criticism from opposition parties over Beirut's 33.8 billion euro package of cuts and revenue measures aimed at bringing the budget deficit down to 4.6% of GDP in 2026, said analysts in a UBS note. So they're trying to attack their debt spending problem. They're talking about 43.8 billion of cuts and revenue measures, new taxes, and that's supposed to bring their deficit down to 4.6% of GDP, which means they're already running a ridiculous deficit. France recorded the highest budget deficit in the Eurozone last year at 5.8% of GDP and remains under EU monitoring. We did the same thing. We ran deficits over 6% of GDP, and at least the French are trying to cut their deficit. What did we do? $9 billion of Doge cuts were codified into law. Ride that rocket, baby. With his government lacking a parliamentary majority, Beirut faces the risk of defeat in the confidence vote, which could trigger either the appointment of a new prime minister or fresh elections by President Emmanuel Macron, UBS added. That's pretty much what happened last year, the last time the French had this problem. Markets have grown weary after last year's collapse of Michel Barnier's government, which failed to pass the 2025 budget. So we got spending problems in Europe, spending problems in America. How about the UK? How are things going over there? The UK bond market is drifting without anchor. Oh, that sounds nice. As the 30-year yield hits the 27-year high. Bond market pricing suggests UK government yields are drifting without anchor. That's the assessment of Panmure Liberum's chief economist, Simon French, reacting to the latest downtick in the price of UK government bonds known as gilts. 30-year gilt yields now at 5.61% continued to climb to 27-year highs after Chancellor of the Exchequer Rachel Reeves reshuffled her team in preparation for her crucial budget to be delivered this autumn. Most worryingly, however, is they are rising faster than those of other G7 nations. In a post on X, French drew attention to the so-called moron premium that has developed on gilt yields owing to the questionable fiscal policies pursued by several successive governments. French does not concede that stubborn inflation and a hawkish Bank of England could be cited as factors behind the rising cost of UK government debt, but contends that it's more a function of fiscal regulatory choices made since the general election of 2024. In other words, they're just spending too much freaking money on stupid crap, kind of like everybody else is. And the result of that is, well, look at the French 30-year gilt yield. This is the chart of what that has done going back to about 2019. Right here, guys, this was the UK gilt crisis. This was when the UK pension system almost collapsed in 2022. Back then, the yield on the 30-year gilt went as high as 5.1%. Now we're sitting at 5.6%, even higher than that, and they are still grinding higher with no end in sight. It's getting more expensive to borrow, even though the Bank of England keeps cutting rates. Why? Because the central banks don't control the long-term interest rates. Those are more influenced by inflation expectations than anything else. And, well, cutting interest rates makes long-term inflation expectations worse. Pay attention, Federal Reserve. Those rate cuts that are probably coming in September might just make things worse. Also, check out shares of GoPro, the newest meme stock. Look at this thing, up 36% yesterday to $1.65. Now it's trading down a little bit pre-market today, giving up about 1.1%. But what the heck happened yesterday? This thing went vertical. Well, shares in action camera maker GoPro surged more than 36% on Monday, with the stock up a further 3% in pre-market trading on Tuesday. That since has reversed. The stock recently became an addition to a new batch of meme stocks and a resurgence of the trend. Online real estate service Open Door Technologies, donut chain Krispy Kreme, and department store Kohl's were also part of this latest class of meme stocks. Retail investors piling into the stock have helped drive a 51% gain in GoPro shares year to date, though the stock did dip following the release of the company's second quarter results earlier in August. That's because GoPro's business kind of sucks. Action cameras is a heavily commoditized business, and, well, they're engineered to short squeeze. That's all. We've got another one is surging here. Check out Tilray Brands. They were up 21% yesterday, and they're up another 8.5% this morning. So what is going on with Tilray? Shares of cannabis producer Tilray Brands jumped nearly 21% on Monday and we're up a further 5% in pre-market trading on Tuesday. The rallies come after analysts at Jefferies, which had a buy rating on Tilray, lifted their price target on the stock from $1.50 to $2 a share, noting improving sentiment towards cannabis reclassification. That's the big one, that cannabis reclassification. The government is toying around with not quite legalization at the federal level, but a step in the direction of decriminalization. Don't quote me on the actual classification, but they're talking about reducing the classification of cannabis, which would theoretically open up things like the financial system, banking, and more traditional things, credit cards and such, to these cannabis companies, which should have improved business prospects if that happens. That being said, the cannabis sector has been kind of just a beached whale for the last couple of years. This is one that reached bubble proportions, and then federal legislation never really happened, and the whole thing just kind of fizzled out. Also going on this morning, guys, we have got durable goods came in for the U.S. Durable goods were down 2.8%. That is slightly better than expectations. I think expectations were for a decline of about 4%. Yes, they were. So durable goods dropped 2.8% for the month of July. That follows a 9.4% for the month of June. And, of course, a big surge in May after the taco trade. And that surge in May followed the big decline in April after the panic over Liberation Day, which followed the big surge in pre-orders in March, everybody trying to get their stuff in before the tariffs. In other words, the tariffs made a mess out of durable goods orders. This chart has become increasingly volatile, and I don't really want to draw too many conclusions from what durable goods orders are doing until we've had a couple more months of something resembling normalcy in tariffs and trades in this trade war. But for now, they declined. They're continuing to decline, but less than expected. Now, the big source of that decline appears to be aircraft, and you can see that in this United States non-defense capital goods orders ex aircraft. When you take out planes and when you take out defense, this jumps up to a positive 1.1%, which meant that whole big negative 2.8% was driven by a reduction year over year in orders for aircraft. That means Boeing. All right. Now, Boeing had a lot of problems last year. It could be leftover anxiety from all the safety issues Boeing had, but my gut tells me this is actually companies or countries retaliating against the United States, targeting Boeing as a way to bring Trump to the negotiating table and get him to back off on tariffs. Other things like targeting agricultural exports is a big way to get leverage on the United States. Countries are doing that as well. So we've got this noise in the chart in durable goods being caused by the tariffs on, tariffs off, tariffs back on. People are targeting Boeing for retaliation. It's really hard to draw any conclusions here until we get these charts to stop with this volatility and normalize. But for now, those negative numbers will be a drag on GDP for this quarter. And the last thing I want to talk about, guys, is, we're closing out August here. We got a couple of days left. All eyes are on the Federal Reserve. Obviously, this Lisa Cook story, President Trump putting pressure on the Fed to cut rates. It's worth pointing out that right now, the market still thinks the Fed is definitely going to cut. We're looking at 86% likelihood that the Fed cuts in September versus just a 13, maybe a 14% likelihood that the Fed leaves rates alone here. And another thing I want to point out here with this Lisa Cook thing and targeting her, and again, whether she's being politically persecuted or whether she actually committed the fraud, see that whole earlier discussion. But the point is, Trump leaning so hard into rate cuts here might actually backfire. This is going to create a situation where Fed governors are going to feel pressured to not cut in September because they don't want to be seen as acquiescing to President Trump. So that's something to think about here. Right now, President Trump, if you just shut up and say nothing, you'll get what you want. If you keep pushing so hard, and again, I'm no fan of Lisa Cook. If she did commit the mortgage fraud, then to hell with her. And I think a lot of the Fed governors are doing shady things like that. But if your goal is really to get rate cuts, just keep your mouth shut and it'll happen. The market is saying it's probably going to happen. It's the wrong thing to do. The money supply is growing too far. The cost of living is too high. People can't afford houses. Rate cuts is the dumbest thing you could do right now. We need lower asset prices. But there it is. right now it looks like they're definitely going to cut. Definitely, probably, maybe. I just want to say thank you very much, Mr. KDM. Thank you so much for supporting the channel, KDM. He says, just thinking, but not too serious. If government is buying equities, why not buy Bitcoin? Well, a lot of people thought the government was going to do that right up until a couple of weeks ago. Yeah, actually, no, what was it, 2 weeks ago? When the government released that story that said, yeah, we're going to create the National Bitcoin Reserve, but we're not going to buy Bitcoin. We're only going to put seized assets into it. So there were at least enough quasi-serious people in the government exploring that, but they decided not to do it. Or maybe just seize equities like Bitcoin in asset forfeiture. That's what they're going to do. You know, if they bust some cartel member and he's got a cold storage wallet on him with Bitcoin in it, and they seize those assets, that will go into what are they calling it? The strategic crypto stockpile, or the National Bitcoin Reserve, whatever they're calling it. Strategic Bitcoin Reserve, I think, is what it is. It's going to be seized assets. They're not going to be buying more Bitcoin, nor should they. It's stupid to borrow money to buy Bitcoin. All right. I mean, we're in a bubble that has been created by too much freaking leverage, too much freaking margin. The federal government should not be joining in that. That's not what the federal government is supposed to do. All right. Provide for the common defense. That's all your job is at the federal government. Everything else, just knock it off. Anyways, thank you, KDM. I appreciate the support of the channel. And thank you, JJ Watt, who says government buys 10% stake in Intel and possibly defense stocks. Why not nationalize miners next when metals begin to take off? Well, it's funny you should mention that, JJ Watt, because the federal government did kind of nationalize a miner. MP Materials is the rare earth miner, refiner, pretty much the only rare earth game in town in the United States. And even then, it's a very small outfit. They're just getting started. But we did nationalize them. The DOD bought, I think, a 40% stake in the company a few weeks ago. I mean, we're doing this nationalization thing. Who had Donald Trump as a socialist on their 2020s bingo card? I mean, really, guys. And again, I know I'm going to get some comments here because some people don't like anything bad being said about dear leader. And look, I voted for the guy 3 times, so I've earned my right to complain about his decisions. I don't just mindlessly follow the guy. I would not be okay with his opponent doing what he's doing. If Kamala came in and was like screaming for rate cuts and print more money and nationalizing companies, I'd be pretty pissed about that because it's stupid to do those things. So when President Trump does it, I'm going to call it out all the same. We shouldn't be doing this. The government shouldn't be taking stakes in companies. The government should not be pushing for lower interest rates to inflate asset bubbles. And the government should not be running deficits at 6% of GDP. All of the above. Thank you, JJ, for supporting the channel, sir. Appreciate the super chat. And thank you, everybody, for having your coffee with the Melonheads today. Appreciate that very much. Thank you also to my magnanimous Melonheads on Patreon and YouTube. You guys are awesome. Thank you so much. Links down below, should you feel so inclined. Don't forget that algorithmic mayhem, that like button, that subscribe button on the way out, if you feel so inclined. And also, hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.